Alrighty guys, as y'all can see by the title of the video, I'm going to show you the trade setup I took today to make $580 trading NQ futures. Let's start out with our higher time frame bias. This dotted line right here, that's market open that I marked. And on that candle, obviously, we see it comes down, and what is this? We have a daily, let me pull it over here so you can see it. It's a daily fair value gap. Now, as you can see, we previously had price respect the fair value gap and shoot straight out of it, which is exactly what we're looking for today. So our initial bias is bullish. We know we have this fair value gap that hopefully it will respect, and we have this 4-hour volume imbalance and this 1-hour volume imbalance. You can see the 1-hour volume imbalance right there. Those wicks right there, you see. Let me move that. Those wicks. That's 1-hour volume imbalance. And then here you see the 4-hour volume imbalance, these wicks right here. So we're using that as our draw into that daily fair value gap. It does that upon market open essentially. Comes down, gives us a lot of buying pressure out, or whatever you want to call it. To the upside, our draw was the volume imbalances. Now once I had my bias, I marked out relatively equal lows that go back all the way to May 1st, I think. But what confirmed these relatively equal lows, look at the level that they're at. Look at the levels they're at. 19,757 is the first one. So that's a perfect relatively equal low that we're targeting, waiting for that to get swept. Very choppy and wicky, I guess you could say, price action. Look at all these fat wicks, especially the first minute of the day. Lots of big wicks, not allowing for much of a first presented fair value gap within the first 15 minutes. But, I mean, this is like 3 handles of a first presented fair value gap. I did not want to trade the inverse of this, even though it would have been a great trade. There's just no confirmed entry for me on this. You see it closed outside of it and then opened and went back up, inversed it again, and then the next candle straight back down again. If you would have gotten in anywhere in here, obviously would have been a good trade to the downside, targeting those lows. But I was really waiting for price to sweep those lows so we can go higher. And as we predicted, comes down here, sweeps the lows essentially, well, not to the tick of the 19,757, but we marked there's other relative equal lows on May 1st right under those, and it's almost to the tick of that body. And we've got one sell side imbalance, buy side inefficiency that price inverses. Big candle. I didn't want to jump the gun on this. This candle creates a buy side imbalance, sell side inefficiency, and we waited for price to come back in a little bit, and we got not a great fill at all, but we rode it straight back. We used our first presented fair value gap as our draw. This is such a small fair value gap that I didn't use it as a first presented fair value gap for entry, but I was willing to use it as a draw. But if you wanted to use this one as your entry or draw as well, you would have been perfectly fine. You could have entered on this one to the downside too, but obviously you see there's no re-entry once it was formed. So yeah, we used the first presented fair value gap as our draw. Could have used the second, could have targeted any of these new day opening gaps. And wouldn't you know, we see price come up here to this 20,000 level. And that gets you into this volume imbalance. So our daily bias was perfectly correct, filled in these volume imbalances.